It was the OGs. I didn't realize they were looking to cash out. There was definitely some people who had bought Bitcoin really early, maybe using the ETF launch as sort of like an IPO moment to get some profits.
Just because, people that have been supportive of Bitcoin for so many years, why they need to see the ETFs as an IPO moment? It doesn't really kind of make sense to have them all selling out.
Most of the outcries come from the people who have a majority of their savings are in Bitcoin. They're a little more panicky and nervous than the ETF people, which is ironic. We've always equated Bitcoin to hot sauce, and most ETF investors, I think, use it like that. They have like a little allocation on top of like otherwise sort of vanilla stocks and bonds portfolio. No big deal.
The money they are moving the world are the money from the boomers, and those people are not thinking about Bitcoin as they're thinking about gold.
I've frequently called it teenager gold. It's like a young, volatile teenager version of gold, which is 5,000 years old. So it is part of what makes it so unique is that it doesn't just move like gold. And that's going to really carry the day, I think, for a long time.
Welcome to the Financial Fox. My name is Steffi, and today on the show I'm going to be joined by Eric Balchunas, ETF Analyst at Bloomberg and expert on NFT ETFs, including Bitcoin ETFs. Eric has this hot sauce theory for Bitcoin that is very interesting. The Bitcoin is the spice, right? But the discipline is the chef. And diversification is very important. So most people pour the whole bottle and burn their mouth, right? But since the Bitcoin ETFs and the more institutions coming into the space, there is a different way to think about Bitcoin. And this is how institutions manage the spice, the burn, in a different way than retail investors do. Eric talks about the Bogle Effect. So ETFs drive cost to zero, is true, because you pay just a small fee if you want to get exposure to Bitcoin versus going on Coinbase or Kraken or any centralized exchange and buy your Bitcoin there. There is more work that you have to do. You actually need to learn how to do it, and it's going to be more expensive. But the key question is, does the cheapening of Bitcoin kill the crypto Bitcoin culture, or it is just the final step of adoption? When BlackRock sell Bitcoin for free, does the sovereign individual lose their edge? My commitment is about educating to Bitcoin, sharing great conversation that I had with some of the thought leaders and experts in the space, and hopefully bring more and more people to understand what really Bitcoin represents, which is sovereignty, and it's something that I'm really passionate about. Starting with a sovereign body, followed by a sovereign mind to understand sovereign capital and sovereign money. Bitcoin plays a key role into this, as you do, because everything starts with the sovereign individual. Remember that anything on the show is not financial advice. So do your own research, consult your advisor, and be accountable for any decision that you make. That's really important. Hi Eric, how are you?
Good, how are you?
I'm good. It's great to have you back on the show.
Great to be here.
Yeah, well, after a year, I remember we were talking about Bitcoin ETFs, and now, a year after, Bitcoin is having, an interesting time. Where are we? Are we at the bottom of the bear market? Are we just at the beginning of the bear market? I think investors are confused. So it will be nice to see. How do you see?
Yeah, it's hard to tell. I mean, I'm one of these people who just readily admits I don't know the future. And I personally didn't think Bitcoin would go down this much. I knew it was volatile, but I thought, okay, well, the ETF investors came in and they're pretty strong holders. I did not think they would really panic much. There'd been a couple 20% pullbacks and they just kept putting money in, no big deal. It was the OGs. I didn't realize they were looking to cash out. There was definitely some people who had bought Bitcoin really early, maybe using the ETF launch as sort of like an IPO moment to get some profits. So that's been some selling pressure. It's just been like, fear is weird. Fear can spread. And so there's just been like this sort of really negative vibe and fear out there, and it can be scary at times. But people do forget that Bitcoin went up 450% in only a 24-month period up until 2025. 2023 and 2024, it went up a ton. I mean, probably too much. So if you could borrow some of those returns and put it in this year, you'd still be fine. So I try to say you got to zoom out a little bit. But it's certainly a rough year this year. And last year was like, it wasn't down that much, but it was just like flat. And there seemed to be all this good news that would help it, but it didn't really do much to the price. It's just been like a little bit of a tug of war in the market. The ETFs have held up well. There's been some outflows, but not that much, really. About 7% of assets have left because of the downturn. That's pretty good considering it's 45% from the top to where we are now. So I think all in all, Bitcoin does this. I guess what we learned is that the ETFs might limit day-to-day volatility, but they don't limit big boy volatility when it happens. And it's still a volatile, kind of risky asset. We've always equated it to hot sauce, and most ETF investors, I think, use it like that. They have like a little allocation on top of like otherwise sort of vanilla stocks and bonds portfolio. And the stocks and bonds have done great. So that's why I think the ETF investors have been like fine with the downturn. No big deal. It's only a tiny portion of the portfolio. Most of the outcries come from the people who have a majority of their savings are in Bitcoin. They're a little more panicky and nervous than the ETF people, which is ironic, but understandable when you think about how much they have in there. So we'll see where it goes. There was a case where the gold ETF went down 40% in 6 months about 10 years ago, and it saw 33% of its assets leave. So things can get crazy. But IBIT and these ETFs, they're not going anywhere. They're very liquid. When Bitcoin goes up, they'll probably get more inflows. When it goes down, you'll probably see a little bit of outflows. This just happens with ETFs across the board. There's 4,800 of them. So I don't really worry too much. It just feels like a little bit of a letdown after such a nice run up for a couple of years there. But maybe we were just due, IBIT is still up 50% since launching, which isn't that bad.
Yeah, interesting, because obviously there was that narrative about OG leaving the space, and I never kind of bought into that, just because, people that have been supportive of Bitcoin for so many years, why they need to see the ETFs as an IPO moment? It doesn't really kind of make sense to have them all selling out. I mean, at the same time. And also, that as well, the Bitcoin community, if you are a Bitcoiner, you never sell your Bitcoin, right? So you are kind of like a hardcore, I only believe in Bitcoin, I only invest in Bitcoin, I'm not going to give my Bitcoin to custody to anyone. So I don't believe that all the OG right now or in the last few months, they just all sold out. There could be a few people, that's fine, like, life changes but I never kind of believed that was the reason. Do you think it's like any other dynamics that we are missing?
Yeah, I mean, there's trading shops that arbitrage this versus that. There's people who do leveraged Bitcoin, and some of those people probably got, flushed out. So some of the leverage came off. But just my feel for this, I feel like that is 10, 20%. Like those people can move the market 10, 20%. But this sell-off is way bigger than just some traders in the outskirts. I think some actual real holders had to cash out. We had Matt Hogan on ETF IQ, the TV show I do, and he said that some of these people, they bought in at $10,000, and now that's worth millions. So it's probably pretty tempting. They're older. They probably are in their 30s or 40s now, and they're trying to use money for houses and stuff like that. So I get it. I'm with you, though, on this idea that I think that the premise of Bitcoin is still completely in place, and I would think the OGs would still feel as though this would be a hard money, a place to store value better than anywhere else, because we still have a government that is not going to stop spending money and incurring debt. The money supply is going to keep going up. The fundamental case for it is still completely intact. So I do think it'll be fine, but I have heard some OG people who got into it really, really early, like the cyberpunks, and those types are maybe a little more dismayed because it's gone so mainstream to the point where the biggest Wall Street companies are into it and the government's into it. Almost might feel weird that this renegade asset is now accepted by all this mainstream institutional world. That said, that's not Bitcoin's fault. Bitcoin is still a user-run money that is somewhat of a minor miracle that you can have all these computers that don't even know or like each other have a consensus on what the blockchain is, and it works, again, with no actual leader. It's pretty incredible. So to me, that thing that has lasted 17 years definitely has some value. How much value, we'll see. But as the government keeps spending money and inflation is different in different countries. It still has a strong case. So I would be weird to say if you're an OG, you're like, well, I don't like the BlackRock's into it. Okay, I'm going to sell out and then go into what? Like, you just made the case that holding it in dollars would be like holding a melting ice cube. You think stocks are only supported by inflation. So it just seems like all roads would lead back to Bitcoin anyway for those type of people. So maybe they're just trying to take profits before a 4-year cycle sell-off and they'll come back in. Bitcoin has a habit of like taking elevators up and down. So could take an elevator right back up in a couple months. And in October we could, be like, well, they all came back in. I don't know. But these are some open questions for me because remember, I'm an ETF guy, but I've frequent tourists of the crypto planets. I speak fluent, I'd say conversational crypto, but I'm not full in. And so this is just my observations as an ETF person.
Well, I would say I've been in Bitcoin for over 10 years and knowing quite a few OGs, there is no second best. They wouldn't sell Bitcoin to buy Ethereum or to buy the coolest crypto. What they are going to do, I get you. Obviously, you want to increase your life. You want to get out of the industry because maybe you've got other priorities, but that might be one or two people. What else are you going to do if you are a Bitcoiner? You just want to advocate.
Yeah.
And so it just sounds we are trying to justify the sell-off by saying, all right, then these people sold. I really kind of still believe that. Anyway, so because you are, you have got so much experience in the ETF space and you are following, the Bitcoin ETFs and stuff, can you give us some numbers on how ETF adoption has evolved over the past year? Because I think, getting obviously more institutional investors to adopt these assets, even if it's in a form of ETFs, is very important for Bitcoin to go mainstream and have obviously less volatility, which, is also very important.
Gotcha. And when we talk about ETF adoption and growth, we're just talking about Bitcoin right now, correct?
Yes.
Okay, so I'll give you the numbers right now, 87 billion total, but that number had hit 150 at one point, so kind of cut in half almost. But again, that's largely because of the price. Again, the flows reached cumulative 60 billion, so 60 billion net was put in at the peak. That was in October. Right now, I think the cumulative flows are like 53 billion. So again, only 7 billion. So the flows have held up really well considering the price. So that's what I would say generally. There are, a dozen of these spot Bitcoin ETFs. IBIT's the biggest, but they have 7 of them now over $1 billion. So that's good. It's a strong middle class. Most of those are very liquid. The reason they're so popular and will be around for a long time is that they're very efficient. You could buy a Bitcoin ETF on your Schwab account and the fee is, there's no commission on Schwab. So it's free. And this bid-ask spread is like 1 or 2 basis points. And then you own Bitcoin and then you pay 25 bips a year for BlackRock to basically store your Bitcoin. So a lot of people really find that to be a strong value proposition versus going to a crypto exchange or doing it themselves. And that's going to really carry the day, I think, for a long time. The question is, do you want Bitcoin? And that's where a lot of our former conversation is happening. But look, one thing about the Bitcoin situation, the ETFs, is it doesn't just bring the products in, it brings the wholesalers in. So I know these ETF companies, just like the OGs, these are very smart, polished people. And now you have armies of wholesalers who are talking to advisors about why Bitcoin has benefits and the Sharpe ratio and the volatility and all this stuff. And these conversations are in their language, and it's powerful. So the fact that you have like the traditional finance world, not every issuer is into it, but most of them seem to have a product. They're out there talking to clients and probably holding their hand when they call after a bad day or week. And that's pretty powerful. You don't really have that before. It was a little more just Wild West, I think. And the good news about this is all these wholesalers are talking to what we call advisors. And financial advisors are massive. They look after about $50 trillion in the US. And a lot of that money's boomers, and that's who has a lot of the wealth. And so they are, really good psychological coaches and behavioral coaches. So again, all of this stuff is really powerful. So when you have a Bitcoin ETF, you don't just get like the product on the market. You get all of these people with, different degrees and experience who now are kind of on board. And that's also something I think some of the people who, want to spike the football that Bitcoin's dead, in these downturns, I think they forget this. I wouldn't bet against it. I said this when Bitcoin ETFs came out, and there was a couple people saying, "Oh, these investors are all fickle. They'll come in, they'll go out. These aren't the investors you want." I'm like, these are This is strong. This is the strong, smart money retail. There's two kinds of retail, in my opinion. There's dumb money retail, which is like, ooh, GameStop. You know what I mean? Like, or I saw Tom Brady in a commercial. Let me buy this. That was who bought, I think, Bitcoin during the FTX days. ETF retail are very smart, savvy people because ETFs don't have distribution fees and they're very cheap. And if you are into ETFs, it means you like have a brain and you're like really into investing. And the advisors are also the ones who use ETFs are also very with it. So there tend to be smart money, which like they understand behavior. They probably go in thinking, oh, I'm going to make a 4-year commitment to this. So this isn't like tourist, dumb retail. So that matters too. And again, all of that is what comes with the ETFs. That's why it was such a big deal.
I'm so glad that you brought up that point because one thing is speculation, the other thing is building a portfolio. And that's where the ETFs come in as, an allocation to perhaps a sector or an asset that fits within a portfolio, and that's where you are not looking to sell next month or next 6 months. You might have got a 5 years, a 10 years plan. That's what those advisors, they do advise on a portfolio that is something that, you can build over years, but you need to stick to it. And I know that very well because talking to advisors, that's what they said to me, right? And I like the speculation. But, they kind of say, right, we need to build a portfolio right now. Now, the question is, what percentage of the portfolio is now as a range allocated to Bitcoin?
Yeah, these people probably have 1% of their portfolio is in like Bitcoin, which also is why they're able to not freak out. As I said earlier, if your majority of your savings is in Bitcoin, you're going to crap your pants a little more during downturns. What's interesting about this sell-off is that it happened when stocks were up. Normally they move together, right? They have in the past. So the fact that these ETF investors have the stock portion of their portfolio was up 20% last year. It's up 2% this year. That's pretty helpful because then, okay, fine. This thing I have 1% in is down. It's okay. I can live. So this is diversification and something I try to explain to the crypto people because like I'll go on these podcasts and like they don't do diversification and they don't do stocks. I mean, I was surprised. They're that in and I'm like, okay, God bless you. But a lot of people, this is why diversification is helpful. It calms your psyche down. It's like an anti-anxiety drug. And so that's another reason they've held up pretty well. Now, if I will say, if stocks were down big, like let's say the stock market was down 30%, Bitcoin's down 40%, you'd see more outflows because they would start to maybe sell the outer layer a little first. Like they would probably not sell the stocks, but they'd be nervous. So they might sell some Bitcoin to buy something that's going up. I don't know, but it's been helpful for Bitcoin, I think, also that the other portion of asset classes have been up or at least stable. But this is exactly why those people diversify. So that's why you're not really seeing them panic. And the other thing that was brought up was this is only a 2-year-old ETF, right? A lot of ETF, like by the way, IBIT, it got to 100 billion 4 years faster than the next fastest ETF to hit 100 billion. So it's a phenomenon, and the people who bought it in the first 2 years were probably people who had some predisposition to buying Bitcoin. It probably, because I had heard, it was Matt Hogan again who said, it takes like 7 or 8 meetings with an advisor to get them to bite on Bitcoin. They just move slow, like an aircraft carrier. They don't jump at things. And so to get them and to do that, that means that the first people who bought in that 100 billion was probably people who were more open to it versus again like tourists or FOMO people. So that also I think probably gives them some longevity in their view. And they probably went in going, okay, yeah, I get it. I like Bitcoin. I'm here for the long run. So yeah, that's why the ETFs, my opinion, they're misunderstood a little bit by the crypto people because they're just so used to having like their whole livelihood in one thing. It's just
that could be like
every sell-off is an existential crisis. It's a crisis of faith. It's like, oh my God, like did I do the wrong thing in life? And the ETF investors, they're not thinking like that.
Yeah, it's actually a really good point because when it comes down to investing and trading, there is the element of like, God, the market is not really doing well, so everybody freaks out and then you panic. And this is not really good for your mental health, where if you do diversification exactly, then you are able to kind of face volatility in a different way. And that's just so important. But in a way, also with ETF, if you want to get exposure, now let's move it away from Bitcoin. If you want to get exposure to mining, then either you pick the right company that is going to give you a 10x in the next year, right? Which is very difficult because, it comes down to management, it comes down to project, it comes down to how well they communicate to the market. Or you can just buy an ETF, and in a way is less stressful way to get exposure to something.
Yeah, I agree. And that's why I think a lot of there's people who are trying to tokenize ETFs and stocks so that people on chain can diversify. And I think that'll play well. I think as they get older, they're going to want different things in their portfolio. I know some of them are like, well, stocks are only up because inflation is up. Like they tie stocks market in with just like government printing money. And they have a point. Because I think like the S&P in gold terms is like flat over like 30 years. I mean, it hasn't, but this is where it helps. I've always said, because like there's some stock investors, there's a big debate in the stock world over whether to do international stocks or do you just need US. And some people are like, no, you can just stick with US if you can handle a little more vol. Because that's where most of the growth is, and it's global. It's a global world anyway, and you don't need international. But I always say international is good if you tend to panic, because there'd be times where like the emerging market ETF would be up when your US is down. So this is the question people really have to ask themselves: how much do I get anxious during downturns? If you do, and you know yourself, you should diversify a lot. If you don't, and you're just like really like nerves of steel, then you don't need to diversify that much. You get a bigger reward probably if you don't diversify, but diversification can calm your nerves, and the whole point is to not sell at the bottom, because that's the worst time. So how do you stop from selling at the bottom? Diversification is one way to do that. But different people have different stamina levels, or I guess nerves. And so you have to know yourself a little bit. That's why some people use advisors. And as I said earlier, if the boomer client calls the advisor and says, hey, my Bitcoin's down, the advisor's probably like, it doesn't even matter. It's your whole portfolio is only down 40 bips because it's only 1%. Give it, and then boom, that is not a sale. So this is part of why advisors get paid 1%, is because they're very good at talking investors off the ledge. And then 10 years later, the client's like, thank God you told me not to sell. So this is sort of an issue, not just with Bitcoin, but with stocks and bonds and international, and how much you should diversify. Because the more you diversify, potentially, the more you bring down that total payoff later, but you also bring down your nerves. So it's a concoction that really should be customized to each person's mental stamina for downturns, really.
And financial situation as well, because obviously you need to understand at what stage of life you are and what you want to do. So that's definitely also a conversation to have. Now, beyond the Bitcoin, let's talk about other ETFs and where you see interest picking up. I definitely want to talk about gold and precious metals, which I really do believe is not. So Bitcoin is digital gold. And that picks up exactly what you said before. The money they are moving the world are the money from the boomers. And those people are not thinking about Bitcoin as they're thinking about gold, right? So obviously money movement is very different. And when people say gold go up, Bitcoin should go up, that's not really the reality. You don't understand, how those assets are actually the history of assets. But anyway, just tell me what you are excited about, and what do you see right now kind of happening?
Yeah, by the way, Bitcoin, I always thought it was kind of like if GLD and QQQ had a baby, it would be Bitcoin or IBIT. In other words, it's kind of like a cross between tech stocks and gold. But lately it's moved more like with tech stocks, software in particular. You can't not. Unlike tech stocks, which could issue new shares and they are basically, you're betting on a business, Bitcoin is a commodity. So it's almost like a commodity, but with tech stock kind of vibes. It's I've frequently called it teenager gold. It's like a young, volatile teenager version of gold, which is 5,000 years old. So it is part of what makes it so unique, is that it doesn't just move like gold. Gold, having that history, is certainly going to be used by certain people, especially big money institutions. At the end of the day, they just know it, they trust it, and they have a lot of people looking at them and counting on them, and they can't really take big risks. So I think a lot of institutions, the one we've seen in Bitcoin, are just doing again, the 1% thing. But when it comes to hey, let's buy a store of value right now, I think that's still going to lean towards gold. So you're right, it's a different buyer base, and Bitcoin is, again, unique. And I'm sorry, your question was about other ETFs, like beyond.
Yeah, other ETF, the sector.
Yeah.
Yeah, what do you see?
I mean, this year what we're seeing is the Mag 7 stocks have they've carried the market for 10 years. This year, some people are starting to rotate a little bit out of them into other sectors like industrials and utilities and sort of defensive sectors. So what we're seeing a lot of people buy is the two things that I think are seeing the most inflows that normally don't are, one, the equal weighted S&P 500. So when you equal weight the S&P, you go from having way tech overweight to equal sectors mostly. So you give more love to the sort of lower, not the biggest of the big mega caps. And those are what are doing better. And the Dow Jones, frankly, which is more, leans industrial. So it's not like the U.S. stock market is having an off year. It's just that the type of stocks going up are the ones that have been left behind a little bit. So it's more of the things you really need, like consumer staples. For example, Costco is having a great year. Waste management, the garbage people, they're having a good year. Sometimes you need these years where these more defensive names, that's what's sort of happening in stocks, in sectors generally. It's only a month or two, but we'll see what happens. And then gold and silver have come back a lot. So they've come down to earth. Bitcoin's struggling. It's a tricky year. The other thing that's up that was a shocker was emerging markets. Emerging markets went up at the end of last year, but nobody really cared. Because a lot of times international, they'll have a good 6 months and then they'll just go down again. And people are I'm not going to bite. So now, though, EM has had a good year. It's 50% in a year. Now the flows are coming in. So look for EM to have an extended, at least 6 months or a year, because all of the advisors and the retail, they're rotating into emerging markets. Again, nobody's really leaving the U.S. or selling it, but they're adding on different things like gold or treasuries. So people have been sort of, again, diversifying as much as they can on top of their U.S. equity exposure. So that's been the main sentiment in the flows that we've seen. I'll leave it there, but there's a lot of little sub things, but I think that's generally speaking the story of the year.
Anything spicy, I saw on X that you mentioned about the Vatican new ETFs, and obviously I'm Italian, so I said, what's that about?
Yeah, so there's ETFs for everything. I mean, literally, they just launched an ETF that invests in alien technology.
God, okay, that sounds like space.
Yeah, it's called UFOD, and it's literally far out. But anyway, the Vatican just announced they made indexes with Morningstar that tilt towards Catholic principles and values. And so it's basically kicks this stock out, overweights this one, and you're left with an index of stocks that fits Vatican values. And they're probably going to try to launch an ETF that tracks their own index, which is, again, wild. But I'm so nothing shocking to me anymore. I don't really get so I'm not too, shocked by it, but it's interesting. I think in a way, if you're a lot of people who manage money have launched an ETF based on the money they manage, might as well. It's hey, we're going to manage money for ourselves this way. And hey, if you want to buy in, fine. We'll take a cut of the fee. Here's the ETF doing what we do. That's happened before. The Catholic values ETFs haven't done that great though. There's a couple of that are big. Cath is an ETF that's $1 billion. It's pretty good. Global X. And then the other one is, this is a great ticker, WW. What would Jesus do? That's $500 million. And those are two religiously responsible ETFs, as we call them. They're kind of like ESG, but with religion. So these are real fringy. There is a market for them, but it's really tiny. I wouldn't look for these to grow big, even if it's the Vatican's name. They'll always be real on the fringes. But like I said, it's good to have. There's something for everything. If you told me something you're into, I'm sure I could point you to an ETF that sort of vibes with that. But the giant blob of money just wants to buy the S&P 500 for 3 basis points. That's still the trade of the millennium. You know what I mean? But this stuff, exists at the fringes.
Let's do that game. So what about wellness? How do you see that industry playing about? I'm not just talking about sports. It's more a holistic approach to it.
Yeah, there's an ETF called BFIT, which is the Global X Health and Wellness ETF. Let me see what it has. I would guess. Oh, it closed. Sorry. Nobody was that into it, I guess.
Okay.
So
it doesn't.
I'm trying to think, they just tried to launch a sports ETF called Goals. Will that invest in sports companies? There's probably a health fitness. Yeah. Some of these ETFs are just maybe a little too narrow to get flows. So they've tried it. It obviously didn't hit at the time. Maybe someone else will try it. We'll call these thematic ETFs. And every now and then, like, they just try a theme ETF, and it's like, there just wasn't that much interest. And I would put the wellness in that boat. So they tried it. It didn't work. That's the story.
Or you maybe think about the health industry, and that's there you can see what is maybe more focused on longevity. I mean, I get you, that is more a niche, but guys, this is actually what we are all striving for. We all want to live forever. We all don't want to have any disease and just be as healthy as possible. So I thought that they had some kind of market.
What you're tapping into is the reason that healthcare ETFs are really popular. Biotech is really done well. And those are the people who invent a lot of the stuff that's going to keep us alive longer. And then pharmaceutical ETFs have done very well. Most people, I think, would just go there for that. Usually the wellness ETFs would end up in stuff like Bally Fitness and stuff like that. They're more like exercise, and those are a little fringy. But the healthcare business is massive. I mean, those ETFs have a ton of assets. Biotech is a perennial performer. So that probably is why it's harder to get a thematic wellness ETF to be a hit, because you kind of satisfy that need with those other ones.
Yeah, and also I think most of these companies, let's say, they stay private as well rather than going public, or then they get acquired by like a big company, maybe it's a pharma company. Maybe there are different ways to analyze a sector like that. Well, Eric, thank you. That was a very interesting discussion.
Yeah, no, thank you. These are good questions.